Hey guys, welcome back to Luxury Galore. Today we'll talk about 10 hedge funds that are totally worth looking into. Let's head into it. Number 5, Renaissance Technologies, Medallion Fund. In the ultra-competitive dog-eat-dog world of Wall Street, it's awfully hard to be the best. It's even tougher to stay at the top. For decades on end now, one fund has quietly crushed the market by margins so large that they'd make Warren Buffett blush. With 66% average annual return since 1988, 39% after fees, Renaissance Medallion Fund is in a league of its own, says Gregory Zuckerman, a special writer for the Wall Street Journal and the author of The Man Who Solved the Market: How Jim Simmons Launched the Quant Revolution. Their advantages include a better talent, a unique management approach, and a strategy of betting on the relationships among investments, rather than wagering on which will rise and fall, Zuckerman said. The fund, which is closed to new investors and only allows Renaissance employees to put their money in, uses a bit of black box strategy, staying very secretive about what exactly the secret sauce consists of. What is known, however, is that the Medallion Fund employs a quant strategy, trading largely on data and mathematical relationships rather than fundamentals, and often owning positions for extremely short periods of time. Renaissance's founder, Jim Simmons, is a bit of a mathematical genius, beginning his career as a mathematician and achieving breakthrough discoveries that led to the development of string theory. He later worked as a codebreaker for the National Security Agency before starting his own hedge fund. Number 4, Bridgewater Associates. Bridgewater Associates is the biggest hedge fund in the world, managing about $160 billion in investor money. Founded by Ray Dalio out of his apartment in 1975, the company shares some similarities with Renaissance, most importantly the principle of building up massive troves of data and allowing an algorithm to make investment decisions. Although the proverbial investing machine has proved its mettle over time, it's still not infallible. Bridgewater's flagship fund, Pure Alpha 2, actually lost ground in 2019, falling 0.5%. That said, Pure Alpha 2, a macro fund focused on investing in global trends, hadn't posted a losing year before that since 2000. Another thing setting Bridgewater apart is its culture, which Dalio has carefully engineered through the decades. The firm prizes radical transparency, encouraging blunt feedback between coworkers in an effort to foster an idea of meritocracy. While this entails a higher turnover rate, it also seems to have worked. Number 3, a perishing square. Getting away from data-obsessed, extremely secretive films like Renaissance Tech and Bridgewater Associates, Pershing Square Capital Management is another one of the top hedge funds in the world. Run by Bill Ackman, a savvy Wall Street billionaire, the fund's top holding a closed-end fund that individuals investors can buy into on over-the-counter markets. Pershing Square Holdings, ticker PSHZF, rose 58% in 2019. Ackman is considered an activist inventor, spotting companies with the potential to create a lot of value, then acquiring a large stake and agitating as a shareholder for changes that will drive up the stock price. Alternatively, Ackman sometimes sells stock short in a company that's struggling or that his research indicates is worth far less than it's trading for, then makes his concerns in public research in an effort to persuade the market. Launched in 2004, Ackman became famous for a reason, beating the S&P for 7 straight years, and making various successful bets including Wendy's, WEN, Target TGT, General Growth Properties, and Canadian Pacific Railway, PC. A horrible losing stretch between 2015 and 2018 characterized by a record $4 billion loss in Valiant Pharmaceuticals. Since renamed Bausch Health Companies, BHC seems to have recently broken down. Number 2, Jana Partners. Another firm using a similar strategy to Ackman's is Jana Partners, run by Barry Rosenstein, considered one of the top hedge fund managers in the game. Founded in 2001, it claims to ignore the crowd and typically focuses on value stocks in its event-driven or activist endeavors. Like many of its peers, Jana Partners is essentially a fund family of sorts, offering multiple different funds with different focuses. The one it's become famous for, agitating for change at companies like Whole Foods, Tiffany TIF, and Apple AAPL, to name a few, is called Jana Strategic Investment, JSI. Between 2010 and 2019, JSI returned 15% annually. Some of the top hedge funds' biggest positions include Conagra Foods, CIG, Callaway Golf Company, ELY, and Bloomin' Brands, BLMN. Recently, the firm shuttered 2 normal equity-focused hedge funds to open an ESG-focused event-driven fund, Jana Impact Capital. Number 1, Tiger Global Management. Medium shot of a confident young Asian businesswoman text messaging on smartphone while working with laptop sitting on the bench against modern corporate buildings in the city in daytime. Last but not least, Tiger Global Management has been one of the world's top hedge funds for several years now. Founder Chase Coleman is a discipline of hedge fund legend Julian Robertson, whose Tiger management was legendary on Wall Street, beginning with $8 million in 1980 and reaching $22 billion in assets by 1998. As far as reported long positions go, Tiger Global was the single best performer among large hedge funds between 2016 and mid-2019, returning 22.4% annually. With over $36 billion in assets under management and just $18 billion in long positions, the rest of that money is spread among investments it doesn't have to disclose, like shorts and private seed investments. One advantage of being a well-capitalized hedge fund is the ability to finance hot companies that aren't yet public, something mutual funds can only do to a very limited degree. Tiger Global has enjoyed some great private equity investments over the years, funding companies like Facebook, FB, Alibaba Group Holding, Baba, Uber, Uber, Airbnb, Stripe, LinkedIn, Jewel, Flipkart, and Square, SQ, when they were privately held. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video. Goodbye.